Hey guys, welcome to my channel Fiscal Voyage, and today we're going to talk about Boeing. We're going to determine in a 5-minute stock analysis if Boeing company is a buy, hold, or sell. But first, make sure to like and subscribe to the video if you find it informative. So let's start. Alright, so here's the 5-minute stock analysis on the Boeing company, found in the New York Stock Exchange as BA. The Boeing Company is an American multinational corporation that designs, manufactures, and sells airplanes, rotorcraft, rockets, satellites, and telecommunication equipment and missiles around the world. Boeing is among the largest global aerospace manufacturer. It is the fifth largest defense contractor in the world based on 2017 revenue. Boeing is organized into 5 primary divisions: Boeing Commercial Airplanes, Boeing Defense, Space and Security, Engineering, Operation Technology, Boeing Capital, and Boeing Shared Service Group. Now let's look at some fundamentals. From 2009 to 2018, Boeing revenue grew at a compound rate of 4.46%, and net income grew at the same time frame 25.9%, which is outstanding. S&P Capital currently has a rating of BBB plus, and year to growth from 2017 and 2018, earnings grew at a whopping 26.9%. The revenue past 5-year average growth has been 3.14%, and net income in the same time frame at also a whopping 17.93%. So they've seen a lot of growth in both revenue and net income. And in that 5 years period, earnings grew at a rate of 17.76%. Last year, they had an adjusted earning per share that came in at $16.01. Net margin came in at 10.34%, which is expanding versus 2017, which came in at 8.77. Debt to cap is pretty high at 76%. They currently have a dividend yield of 2.22%. This is actually lower than the 5-year dividend average, which is 2.31, but it's not too far below. They have a dividend payout ratio of 42.7%, and they've been growing dividends at 8 for the past 8 years, with a 5-year dividend growth rate of a whopping 28.7%, which is outstanding. So even though you get a low yield, you do get high growth. And their most recent dividend, which came in December of last year, was 20.2%. And the Chowder rule, we get a whopping 30.92, which is the current dividend yield, plus the 5-year dividend growth rate. So 30 Chowder rule is outstanding. Normally, I like to see companies at 12 or higher. This is 30. Wow. Future outlook. For this year, analysts expect earnings to be actually lower than 2018's, with $12.54, where last year came in at $16.01. It's a lot of because they stopped buybacks. They had the issues with the 737 Max, so that's why analysts expect lower earnings this year. However, 2020 next year they're expected to come in at $22.90, which is great. So that they're expected to continue growth, and actually CFRA has a 3-year projected earning growth of 14% for the next 3 years. They do have a forward PE of 16, which is a good number I like to see, where their 5-year PE average came in at 21.03, and they currently have a PE of 20. So forward PE lower than the current PE is something I really do like to see when I'm valuing companies. Let's look at the fast graphs. As you can see, the black line is the monthly closing price. The orange line is the intrinsic value of the company earnings, and the blue line is the normal PE. As you can see here, is higher than both the normal PE and the orange line. I like to see companies either below the normal PE or below the orange line for valuation using fast graphs. However, the company is expected to continue growing at 14% growth rate for the next 3 years. Earnings is expected to be a lot higher in 2020 versus this year. So there's still some potential with growth here for fair value. So let's look at the fair value price. CFRA gives it a fair value of 367. Simply Wally at 617, which I think is over super high there. Fast Graphs came in at 226, and Yahoo come in at 416, and my dividend discount analysis came in at 443. Averaging out the price, we get a fair value of 414.39, and with the current price as of yesterday at 361.11, that gives Boeing an undervaluation of 14.75%. With that, I have a recommendation of a buy at current prices. I don't like the fact that the dividend yield is low at 2.22% versus the 5-year average. I do like the 3-year growth rate of 14%. Earnings coming in a little over $20 for 2020, analysts expect. So this year they have some troubles, of course, with the 737 Max. They stopped buybacks to try to help resolve this and save with costs. But I still think the company is a long-term company, is a buy and hold company, and I expect continued growth from this company. So at current prices, it's dropped almost 17 to 18% from this high, 52 weeks high, and with that, I think it's a buy. So let me know what you think in the comments below, and make sure to subscribe and like this video, and subscribe to my channel. It helps motivates me to create more content for you guys. And thanks for watching, and have a great day.